Delegate Cruz is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, witnesses, for being here today. What we've learned in the wake of the first run on a major U.S. bank since the Great Recession is that the management team of Silicon Valley Bank took, quite frankly, foolish actions that no informed financial institution should ever make. Now, by taking on deposits from their customers, which is short-term in definition, and buying long-term bonds when interest rates were low, now that is before President Biden's inflation crisis, they chose to become vulnerable. When inflation skyrocketed after enacting the Democrats' partisan $2 trillion American Rescue Plan, the Fed was late to determine that inflation wasn't transitory, forcing a decision to spike interest rates, creating risk in the banking system. Now, if we backtrack for a second and look at what the Federal Reserve was focusing on when they were hiking interest rate, it wasn't the risks associated with those actions. Instead, it was research papers on climate risks and social issues, which you just acknowledged a second ago that some were focused on climate change. My question is to you, Mr. Barr. I realize you didn't come into your role until July 2022, but isn't it correct that when you did, you quickly announced your holistic view of Fed regulations and your own Fed special scenario analysis for weather and climate risks?
Those are a few different items. I announced that I was doing a holistic capital review, which was looking at capital in the system, whether it was at appropriate levels. We've been conducting that really since July. There's a separate thing, which is that in the beginning of this year, we piloted for the globally systemically important banks, GSIBs, a pilot of climate scenario analysis to evaluate how they were addressing climate risk in the system. That's separate from basically what most supervisors are doing most of the time, which is highlighted in our November 2022 supervision report, which is looking at interest rate risk, credit risk, liquidity risk in the system.
Which we could both agree that interest rate risk, liquidity risk are within your job scope, but is climate risk really something that you should be focused on when we saw all of the red flags on this bank? Now, correct me if I'm wrong, but isn't the role of the vice chair for supervision to focus on bank supervision and regulation? Yes or no?
Yes, that is in fact what I am focused on.
So if that's the case, then were you distracted from the mission of your role, which again is supervision and regulation, and instead focused on climate?
No, I would disagree respectfully with that. The way that we're looking at climate risk is about the risk that climate change might pose to the financial system and to individual banks. It's a very narrow role focused on financial risk, not climate policy more generally. And I think, as I was saying before, we need to be humble about regulators' ability or banks' ability to understand all the risks in front of us. It's prudent to look at long-term risks as well as really obvious and central risks right in front of us, like interest rate risk and liquidity risk.
Well, I would say that what we saw with Silicon Valley was obvious risk. It looks like the mismanagement, it was flagged. There were fair warning signs. And while I appreciate that you were able to focus some attention on the actual supervision part of the bank regulation, we see a gap here. And I think that we would like you to focus on your job as the vice chair of supervision in the wake of SVB's collapse. And I feel like this was a little too late when you all finally stepped in to look at it. So thank you. With that, Mr. Chair, I yield back.
We'll now recognize the gentlewoman from Indiana, Mrs. Houchin.
Thank you, Mr. Chairman. We are here today to really determine who knew what when, who did what when. Is this a failure of Silicon Valley Bank? Is it a factor of lack of adequate oversight or lack of regulation? I'm happy to hear many of you testify today in admission it was largely a factor of lack of oversight. We've heard discussions today about FSOC, the Federal Stability Oversight Council. Vice Chair Barr, what's the purpose of FSOC?
I'm sorry, the question is, what is the purpose of FSOC?
What is the purpose? What's the mission of FSOC?
The FSOC is an entity that brings together regulators from around the financial system, market regulators and bank regulators, to look at risks in the system and to try and coordinate across those agencies.
Right. So it was created by Dodd-Frank in 2010 to provide, according to FSOC's website, comprehensive monitoring of the stability of our nation's financial system. It's chaired by the Secretary of the Treasury. It includes the Fed, the OCC, CFPB, FDIC, CFTC. In fact, all of our witnesses today take part in those meetings. Do you not? Yes or no?
Yes, each of the three of us participate in FSOC as member agencies.
And the function of FSOC, is it also to identify risk to the financial stability of the United States? Mr. Barr, yes or no?
Yes, that is among its functions.
Following an executive order by President Biden in May of 2021 entitled Climate-Related Financial Risk, FSOC now also evaluates climate-related financial risk. Is that right, Mr. Barr?
That predates my time, and we're not in charge of running the FSOC, so I don't know the sequence of events, but it is the case.
I assume that it is now part of FSOC's charge to monitor and evaluate for systemic risk also?
I'm sorry, I couldn't hear the last sentence.
I assume it's also part of FSOC's charge to monitor and evaluate for systemic risk.
Yes, that, as I indicated previously, is a core function of FSOC, is to look at risks across the financial system.
In a quick review of the FSOC meeting minutes dated December 16th, 2022, 5 pages were devoted to, quote, climate-related financial risk. Mr. Barr, many of those comments came from you. I couldn't find any pages devoted to market and news reports of the apparent looming problem with Signature Valley Bank and Signature Bank. In fact, in December of 2022, Signature Valley Bank was listed on the S&P Global Marketplace as the top U.S. bank by proportion of uninsured deposits at nearly 94%. Only 4 other banks were estimated to be above 80%, including Signature Bank, but none of that was mentioned in your December 16th meeting. Are those factors not important to comprehensive monitoring of the stability of our nation's financial system, Mr. Barr?
I was asked at the meeting you were describing to discuss one risk to the financial system, and that was with respect to climate risk.
Let me just ask that question one more time. Are those factors not important to the comprehensive monitoring of the stability of our nation's financial system? The debt ratio, the uninsured ratio, is that not important?
The standard factors we think about in banking, among those factors are interest rate risk and liquidity risk. Those are core issues that we do in the bread and butter supervision every day.
So do you not consider the uninsured ratio as part of a factor of systemic risk?
We look, with respect to microprudential supervision of individual firms, we're looking at their liquidity risk. And one element of their liquidity risk is the extent to which they rely on uninsured deposits. That includes uninsured deposits from financial entities, uninsured deposits from operating businesses, and then their insured deposit base. So it is a core part of what we think about when we think about liquidity risk.
But none of that was discussed in the December meeting relative to Signature Bank or Silicon Valley Bank or any system gap.
As I said, the specific request to me in that meeting was to talk about this issue. We obviously talk about broader issues all the time.
Yeah, I get that. Secretary Lang, earlier Chairman Huizenga was asking about the minutes taken at the meetings for FSOC. You said the meeting minutes are published after the next meeting. However, it seems there's more detailed information than what is shared publicly, and that the closed executive session meeting minutes are not shared at all. Will you commit to providing this committee with unredacted minutes from every FSOC meeting since the March 10th meeting, including closed executive sessions?
Congresswoman, I'm aware of 2 FSOC meetings since these events, March 12th.
Will you commit to providing the meeting minutes for the executive sessions?
They were executive sessions, and we do produce minutes, and we will release them.
Thank you. I yield back.
We'll now go to our final two questions. So the penultimate questioner, Mr. Ogles of Tennessee, is now recognized for 5 minutes.
Well, good afternoon, and thank you for being here. I know it's been a long day. I'll try to be brief because I know you guys have to be exhausted. You know, Mr. Barr, when you look at increasing interest rates, especially in a rapid environment, you know, is that going to create risks when it comes to deposit structure for these, well, really any bank, but certainly as it pertains to small and mid-sized banks?
As interest rates change, whether they go up or down, they create risks for banks, and the expectation is that banks manage those risks, and most banks in the country do manage those risks quite effectively.
Now, the regulatory regime that's in place, do they give specific guidance as it pertains to those risks in a rapidly changing environment?
We do have standard guidelines that are issued to banks about how they conduct their internal liquidity stress tests. Those tests are supposed to be designed to stress stressful environments with significant increases and decreases in interest rates. So they're not directionally guided. They're supposed to test up and down.
Well, as far as some of the guidance that was given specifically to SVB, and I think my colleague from across the aisle said they blew you guys off, what types of guidance or alerts were given to SVB?
So Silicon Valley Bank was required to conduct internal liquidity stress tests on a quarterly basis once it reached a certain size. It conducted those tests, and the guidance back from the supervisors was that the tests were inadequate.
Now, so understanding that you have a bank that grew rapidly in a very short period of time, there was even a Wall Street Journal article dating back to November 11th of 2022 singling out SVB as a potential risk to the banking system. So clearly it was on people's radar. At any point, I think you stated earlier that, you know, you need further regulatory action from this body to further give you teeth, if you will, as you move forward. Did you ever request a hearing on SVB of this committee of jurisdiction, understanding that there was potential risk in the market?
Representative, I haven't asked this body for additional authority. I said we were conducting a review of our existing authority to see where we could have done better on supervision and regulation.
Well, you know, when I think about this situation, and I think about my district, which is although it has part of Nashville, it's predominantly suburban and rural. What's going to end up happening is my small banks, my community banks, are going to end up bailing out a couple of banks that are too large to fail. And so I'm curious, Mr. Grunberg, you know, if my banks receive an assessment from the FDIC and they decide to blow you guys off, is there going to be some sort of regulatory action? Are you going to send them a bill? Are you going to enforce that assessment?
Well, Congressman, and this has come up previously, we're required by law to the extent there's losses to the Deposit Insurance Fund as a result of the coverage of uninsured deposits to impose a special assessment on the banking industry. And we're required to do that through a notice and comment rulemaking process. Right. And as I indicated, we also have authority.
So I guess to the heart of the question, though, is would you go to the bank and say, we want our money? Yes or no?
The answer is, if they were subject to the assessment, the answer would be yes. We do have authority to consider the types of entities that benefit from any action taken or assistance provided.
Well, see, the thing that's important here, though, is I've got to go back to my district and tell my banks they're not going to get screwed over in this process. And what I've heard today is a bunch of tap dancing and no assurances to my district and my banks that they're not going to have to bail out basically the failures of the regulatory bodies that were empowered to do a job. And if you found yourself unable to do that job, you could have come to the committee jurisdiction and asked for support. But I find no evidence that you did so. Mr. Chairman, I yield back my time.
Gentleman yields back time. We'll now go to the ultimate questioner, the gentleman from Wisconsin, Mr. Fitzgerald, for 5 minutes.
Thank you, Mr. Chair. Yeah, I've heard that the same question asked 100 different ways over 2 days. The thing that I'm concerned about is it seems like a bank, shutting down a bank is messy. And I'm not sure if we're nimble enough or if the Fed or the FDIC is nimble enough that if we have multiple institutions that are all failing at the same time as to whether or not we could address this, because there seems like a 3-day period in which everybody was kind of making arbitrary, I'll say arbitrary decisions, not necessarily guided by any specifics. And if there is a table of specifics on what is the red flare that says this bank is in trouble, we need to act quickly, I'm not convinced after 2 days of testimony that that actually happened that way. So I would ask either one of you to first comment on, can you instill more confidence that in fact we do know what we're doing and we can react quickly, and if it is multiple banks, that we're going to be in a good place. And then I have one more question after that.
Well, I can say in regard to Signature that they basically ran out of money to meet their obligations, and that was the reason the bank failed. As I indicated earlier, they barely met their obligations at the end of the business day on that Friday, and it was clear to the state regulator, New York State, as well as to us, that they could not open on Monday and get to the end of the day based on the liquidity they had, and that was the reason the bank was closed by the state. And I'll let Vice Chairman Barr speak to Silicon Valley, but it was a pretty straightforward decision and a traditional one.
Mr. Barr.
Similarly, Silicon Valley Bank basically was unable to meet its obligations in the ordinary course of business. They suffered a devastating run, a $42 billion run on Thursday. On Friday, they expected to face a run of $100 billion, and they did not have the collateral sufficient to support discount window letting, and so they were not able to meet their obligations, and they were closed.
And then the last question or comment, I'll just, Ms. Liang, when were you informed, first of all, that there was a possibility of Silicon Valley Bank defaulting? And was the president made aware of that? How much conversation was happening within the White House? And were there conversations with specific depositors or those that had an interest, like Governor Gavin Newsom in California? And now I further learned that the state makes a decision on actually shutting down the bank. What were those conversations like, and could you characterize them for me?
So I learned, the Treasury learned, or I learned, I can speak for myself here, of the issues at Silicon Valley either Wednesday evening or Thursday after it issued its statement, its earnings report, saying that it had a loss and was going to raise capital. We heard certainly Thursday night of concerns at the institution because of the very, very rapid deposit withdrawals. And then on Friday morning, we learned the California state regulator had closed it, and the FDIC was appointed receiver. We did, that was our situation. Over the day of Friday and Saturday, we heard from many people, institutions, businesses, wondering how they could access their deposits, could they make payroll, and so we were gathering information and consulting regularly with the Federal Reserve and the FDIC. So
Did you speak to Governor Newsom at any point?
I did not.
Did anybody at the White House talk to Governor Newsom?
I do not know.
Okay, thank you. I yield back.
Gentleman yields back. With prior agreement between the ranking member and the chair, I'll now recognize the ranking member for such time as she may consume, and then I'll close.
Thank you very much, Mr. Chairman. Chairman McHenry, I thank you for working with me on holding this bipartisan hearing, and I look forward to additional hearings on these bank failures. Importantly, we need to hear directly from the CEOs of SVB and Signature Bank I also want to thank our witnesses and their staffs for the countless hours they've spent since the failure of SVB and Signature Bank. The economy is stronger today because of your decisive actions. I look forward to hearing from you again when you have completed your review of the bank failures. And I expect those reviews will consider the various matters raised by myself and committee members here today. In listening to the concerns of members on both sides of the aisle, I must say I'm heartened by how much agreement there was. I heard Republicans argue for our bank regulators to be more aggressive in their bank supervision, to do more on-site exams, escalate penalties more quickly, apply enhanced prudential regulations for all banks over $100 billion, expand deposit insurance, and protect community banks from bearing the burden of these bank failures. I and my Democratic colleagues couldn't agree more. And so I look forward to working with Chair McHenry on legislative reforms to effectuate those reforms quickly. Again, I thank the witnesses for being here today and doing everything that you could possibly do to respond to the questions and the concerns that you were presented with today. Thank you. I yield back.
I want to thank the ranking member, and I want to thank the ranking member on our joint call for this hearing. The agreement that we had was to pursue this to find out the facts. I think that's the way the committee comported itself today. I think I won't speak ill of the Senate, but you had a hearing yesterday, and this today was a different hearing. That was the expectation that the ranking member and I both had, and I think it met those expectations. But bottom line for you as the panel, there's bipartisan frustration with many of your answers. There's a question of accountability and an appearance of a lack of accountability. I hope you hear this clearly, not as a partisan act, but as a sincere concern. I think furthermore, there's a lack of transparency in the decision-making by you sitting on this panel to answer for your decisions in that week and that first weekend. And while I think we're able to start painting a picture of what happened, there's still much that we need to understand, specifically timelines of what you knew when and how you responded. I think those are very important things for you three on this panel to answer fully for in the name of transparency, but frankly in the name of building confidence. So there are still questions that somehow after 3 weeks that many of you have given here that you're going to check with staff, you're not sure. This was not a gotcha hearing. This is not a surprise thing. We expect a little more detail than what you provided in many of your answers, specifically the timeline, the data used, and the evidence for your decision making. And we need leadership. Leadership in that key moment of that week, we want to understand that, the decision making. And we've put you in these positions, all Senate confirmed, in very powerful positions in our government. We want you to be capable of achieving good outcomes for the American people and the American economy. We want you to be competent in carrying that out, and that's why we have oversight. And over 5 hours in, you've certainly submitted yourselves to oversight. We will have written questions. For the record, we ask that you respond in a timely manner. But the final note I'll say is understand, in a time where there may be a bit of a political divide in America, I don't think you heard that, by and large, in this hearing, both sides of the aisle. There's sincere concern. And so we ask you to submit in writing these questions. And we know here on Capitol Hill that our work's not done. And we will have oversight of this, independent of your actions and your coordinated effort on oversight with these reports. So I'd like to thank Vice Chair Barr, Chairman Gruenberg, Undersecretary Lang, Thank you for being here today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair. The questions will be forwarded to them for a response. I would ask the witnesses and their team behind them to respond no later than April 28th, 2023, as you certainly work to your self-imposed deadline of May 1st. We are also working to conduct our review together with a Government Accountability Office. We ask for your full participation in data and evidence in particular to support that investigation and oversight. The hearing is adjourned.